Hey there, traders. Welcome back to today's How to Trade Stocks and Options podcast. Today, we have a special lesson for you, and this is coming straight from my brand new trading course called the AI Stock Trading System. I've literally pulled this lesson straight out of the course, and I'm putting it here on the podcast because I really believe that this is going to provide you massive, massive value, and that's what I'm trying to do here. And hey, listen, if this podcast was useful to you at all, I really highly suggest that you go check out the full trading course at AIStockTradingSystem.com. That's AIStockTradingSystem.com. This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Ewell. Hey, make sure you subscribe and hit the bell so you'll be notified every time we give you more tools, tips, and tricks to help you trade faster and trade smarter every single week. All right, now we are on Phase 1, Lesson 7 of the AI Stock Trading System, the 5-steps system to take the guesswork out of trading in only about 10 minutes a day. I'm really excited about this lesson. This lesson could potentially change your life. Even if you never use AI in your trading, knowing what we're going to cover in this lesson is a game changer. At least it was for me. How great traders make millions in up and down markets. So, this is hellaciously clickbait, yet hellaciously true. Give me a second here. I'm going to reach over to my... Here we are. I don't like dust covers on jackets, but this is called Trend Following, How Great Traders Make Millions in Up and Down Markets. Who would have thought? So this book was by Michael Covell. It's honestly, it's like a textbook. It literally looks like a textbook, right? But this book changed a lot for me. And then this one here. How I Made $2 Million in the Stock Market by Nicholas Darvish, with commentary by my friend Steve Burns. He's a great guy. And let's see. All of my trading books are basically how great traders make millions in up and down markets. It's by Trend Following. Trend following has been around since the dawn of time, but there are some online gurus who would tell you that trends don't exist. And when I first heard this person, who I really looked up to, learned a lot from over the years, like the words came out of his mouth that said trends don't exist, I was like, okay, I'm done. I learned a lot from you. I've lost a hell of a lot of money because of you. And now you're telling me that trends don't exist. I'm out of here. No. The only way that great traders make millions in up and down markets is by following the trend. And we're going to go all into what that means. Because I remember just maybe like you were, when it's like, well, how do I know if a stock is trending? Like, I legitimately was sitting there one day and somebody said, hey, I think I was talking to Steve Burns, and man, I'm so grateful for that guy. If you haven't already gone to visit Steve Burns' website, it's newtraderu.com, or follow Steve on Twitter. His handle is @SJosephBurns. He's become an actual true friend of mine, and I'm so grateful for Steve. But trend following works because it keeps your risk low and your reward high. And I am going to show you so many examples of how this works. So don't be too concerned about that. All right, so this is going to be really great. If you've never heard of trend following, I had someone describe it to me, and they were like, it's the only strategy where you can keep your losses small and let your winners go for as long as they want. And it's really, really true. And you are not trying to pick tops and bottoms. Like, this is got to be the easiest way to trade like I've ever seen. And it's literally the only way to catch big moves. And I mean that in every sense of the way. There's no other way to catch a move that's going up unless you are trading with the trend. Physically, mathematically impossible to do to appreciate your stock or your option or whatever the case is if the trend is moving against you. Not mathematically possible. There's the only way to trade and for this to make money is to be on the right side of the trend. So what is trend following, right? I bet you can look at this right here and say, oh, the trend is up. Easy. You're right. This is an easy example. And when you have trend following, it allows the market to tell you where it's going, okay? So you no longer have to guess, is the market going up or down? You don't have to guess. Not only do you have the AI data working with you, but you also have the trends working with you. Do you see how this is starting to stack together, okay? It's just, when you have all this stuff together, you're going to be looking at your portfolio and saying, why did I make this so hard? Which sounds like a lesson I had a couple lessons ago. The way that I have found that works best for me, if it's above or below a moving average. My friend Steve Burns talks a lot about moving average crossovers, and they work. But I'll show you some examples of that in a little bit. Moving average crossovers can significantly lag the move to the point where you lose more money than you really, really want to. However, if you're just working with a moving average on its own, if the price is above or if the price is below the moving average, then that is where you're going to do well. Now, I don't know if I have a slide for it. I hope I do. Oh, yeah. Okay, I do. So the biggest mistake for new traders, okay, and even experienced traders, right? There's the old adage of buy low, sell high. I'm here to tell you that doesn't work. I've lost a lot of money. I personally know of people who wanted to buy a stock because it was down. Let's say it lost 50% of its value. And they're like, oh, it's on sale. I got to get it. And there's so many trading gurus on YouTube who would say the exact same thing. The stock is on sale. Why are you getting out? Blah, blah, blah. Do you realize that when the stock is going down, that means nobody wants it? Just simmer on that for a minute. If the stock is going down, that's because the people who were buying the stock are no longer in the stock. They do not want it. And if they don't want it, that means there's going to be a lot of other people who don't want it. Why do you want something that nobody else wants? But buy low, sell high doesn't work unless you have 50 years to invest, right? Like Warren Buffett. Yeah, it's great. I'll buy low and I'll sell high. And he's made a ton of money doing that, but he also doesn't sell ever his holdings. I don't have 50 years to wait for that. I want to get in, I want to get out, and I want to make money while I can. The real way to trade? And with all of these trading books that you see behind me, the real way to trade is to buy high, sell higher. The first time I heard that concept was in this book right here. And it was like, how is that even possible? How can I buy high and then sell higher? In fact, Reminiscences of a Stock Operator. This one. That was the first one I heard it in. He called it buy high, sell dear, which essentially means buy low, sell high. If I haven't already given you a link, there's a great audiobook of this, audiobook playlist on YouTube of this, totally free. I'll make sure to send you a link for that. So that should be down below. Now, I know you're thinking, right? Chris, how in the world can I buy high and sell higher? That makes no sense at all. I want to buy low and then sell high. I want to buy something that's falling in value and then sell it when it does turn around. But let's say it's falling in value because obviously nobody wants it, and then it continues to fall. How low is low? How far is that trend going to go down? Right? Because we're talking about trend following here. If the trend is down, and it continues to go down, do you think you'll make money or lose money? Lose money, of course. But if the trend is up and it's continuing to go up, do you think the stock will go up in value and you'll make money or lose money? You'll make money. Like when this clicked for me, I was like, whoa. All these people who say buy low, sell high have no idea. Let me show you some examples. You buy when the market's going up, because that's when everybody is buying and it's pushing the price higher. Don't try and pick a top and don't try and pick a bottom. You're just trying to go along in that trend. In uptrends, price tends to stay above moving averages. In downtrends, the price tends to stay below moving averages. So if it's going down and the price has gone down, the moving averages are going down, you can see that it's losing value every day. Why in the world would you think that it's just going to turn around now and go back up? Conversely, you see it's going up. You see the moving averages are going up. You see a lot of people are excited about this stock. You hear all over the place, hey, this stock is doing really well. Price tends to stay above its moving average. So the way that I trade is I enter when a price crosses above the moving average, and then I exit when the price crosses below the moving average. So we're looking at one indicator, one trend line, one data point. Is it going up? Is it going from 100 to 101 to 102 and the moving average is following behind it? If so, that's great. You're never going to catch the top. But if you can catch the 80% of that move where it crosses above the moving average and then crosses back down below the moving average, that's where all the gains are made. That's where millions are made in up and down markets. And it really is that simple. You just watch this line. If it goes above, you buy it. If it goes below, you sell it. I want to get some examples. Not picking stops, tops, and bottoms. Okay. So here is our first example. And I'm going to go into charts and I'm going to show you over and over and over how this works so that somewhere it should click to say buy when price is relatively high, sell when price is relatively higher. Buy high, sell higher. Get in when the market's going up, get out when the market's going down. Don't do the opposite. All right? So check this out. In this particular example, it went up 9.4% in a month. And that was when it crossed this one line, this exponential moving average line. At this point, it crossed over, and you can see it fluttered up and down a bunch of times, and then finally it crossed down below. And then you've locked in your gain of 9%. Right? We're not buying when it's down here, because while it is going up and going down, it's not trending anywhere. But when it hits that trend, and you can catch the meat of that move right there, that's what we're talking about. That's how you buy high and sell higher. You're buying it when it is high. Yes, you're buying it when it's expensive, but it's expensive because people are buying it. Don't buy when it's cheap. Don't buy when it's down here because nobody wants it. So let's go into many more examples. I'm excited to share this. All right, so we're going to go straight into TrendSpider. Like I said, if you haven't already got your TrendSpider trial, go get one so that you can follow along. All right, so first we're going to go, I got to scoot over here to see around my webcam. SLV. So we are in silver. My exponential moving average on silver that I follow, in fact, let me remove the sidebar so it's easier to see, is the 15-day EMA. EMA is exponential moving average. That means it's taking the average of the prices over the last certain number of days and then dividing them to make an average, moving average, okay? Now, I use the 15-day on SLV, and by the time you're watching this, I may use a different one on SLV. I like to back test them on a frequent basis, maybe once a month, once a quarter, and see which moving average does this stock work with. So I'm going to take off everything that's not the silver 15-day exponential moving average. So we're going to take off the 20, going to take off the 5, going to take off the 10, going to take off the 25. So you can see that, like I said, I backtest these, and so that's why I decide on which one to use. But we're going to go back to June 2020. We're going to draw a line in the sand, June 1st, 2020. Okay? So from this point going forward, the stock is priced to be right at and bouncing off of this exponential moving average, okay? And then around June 15th, it goes below. Goes above, goes below, goes above, goes below, goes above. Wait a minute. Doesn't go below. Wait a minute. It's continuing to go. Wait a minute. It's gone a lot. Hold up for just a minute here. Right there. So this move was from June 29th to, what day was that? August 11th. June 29th to August 11th. That move, that trend where we bought high, we bought when the price was relatively high, right? We bought when the price was higher than the moving average. Went up 40% in 1 month. And yeah, you could have gotten out, there we go, gotten out up here. But that's how trend following works. You're trying to catch the meat of the move. You will never catch the top, and you will never catch the bottom. This could have gone on $50 more. Who knows? But it reversed and it came back down. And then you look at the chart and you say, wow, if I had got in here and then out here, I may have lost a couple dollars. I may have won a couple dollars. Same thing. May have lost a couple, may have won a couple. Got in here. I made 40%. And then it got out. And then same thing here, right? We got back in when it was above, and that was at $24, and went up, and it went up, and it went down, and it went down, and we got back out at $24.50. So even this little move right here was a 5%, nearly 5% gain. That's why trend following is so amazing, because you get little losers, right? You let the little losers happen when it goes back below, when you're buying high still, and then it falls back below, little loser. And the next thing you know, you buy it and you don't know when this is going to happen. You do not know. So that's why you got to treat each one of these events as its own potential run. Okay, got in, got out, got in, got out, got in for a huge 40% gain, got out, got in for another 5% gain, got out. Let's see what happens here. We got back in here, and we were in for another 2% gain. This is how trend following works. This is why it makes it so much easier to trade. Old Chris, the way that I was taught to trade, and I kid you not, this is literally exactly how I was taught to trade. It makes me angry that people taught it this way. I'm a contrarian trader. When the stock's going up, by golly, I'm going to go short. When the stock's going down, by golly, I'm going to go long. That's the second, that when I blew up my account the second time, that's why. It's because I was taught to be a contrarian trader, and if stock prices are going up, you better believe they're going back down, buddy. Or they don't, and they go with the trend. And then the next thing you know, the trend has gone up 40%. And rather than making it hard on yourself, make it easy on yourself. And say, oh, the trend is up. I want to buy when it goes up. I want to buy high and sell higher. And that's exactly what happened here. So we're going to remove all the marks on these, and we're going to add the 10-day exponential moving average. And you can see it does dance with the 10-day a lot more than it does the 15, right? It does cross it much more. But even if it crosses it much more, if it back tests well, then that's just a different moving average you can use. So let's go to something like Apple. Apple does really well on the 10-day exponential moving average, at least at the time of this recording. You can see here, let's say you got in April 21st, and it went up. And here's the first time it crossed back down. That was a 13% gain in 3 weeks. It's huge. And let's say you get back in as it crosses back over the 10. And the next time it crosses back under is here. That's another 10% gain in 1 month. So buy low, sell high does not do this. Buying high and selling higher does. Buying high, buying when it's relatively high, selling when it's relatively higher makes life easier. You can do this on any stock, right? Walmart. Oh, here we go. We can do a down, right? Let's say, let's take off the 15 and just go with the, actually, where's the 20? Let's leave the 20 in this case, just for being able to see it better. You can see this, right? How it's going below the 20. Let's say we sell when it's low. Okay, let's say we go short when it's low. We didn't go short up here. We're not picking tops, but it's below the 20. And it just kept going down and down and down. And then only here do we decide, okay, we're done being short. Now, same thing going long. Let's say, obviously they had earnings here that were really good. The trend was up. Let's say you bought it when it crossed this at, I gotta look around my webcam, 121. And then you sold it when it was at 129. Right? It crossed here, ended there. 7% gain in 3 weeks. So you go, just look at any chart. Put on any exponential moving average you want. And just see how easily this moves. How easily trend following helps you identify if it is going up or if it's going down. There's just one criteria to look at. Is it above the moving average? Is it below the moving average? That's two. But that's what you got to know. If you're going long the stock, did it go above the moving average? Yes or no? Did it go below the moving average? Yes or no? You can actually look at the slope of the moving average too, right? Let's say this slope is up. Hey, that tells me the trend is up. And guess what? When it reverses and it goes back down like it is right now, if you were long that stock, you got out. And then it's going to fall. And you can let it fall forever. And then only when it goes back over the exponential moving average do you want to get back in. I mean, I could literally pull up stock charts all day long and show you this. The trend is up. How do I know the trend is up? Because I could have bought anywhere when it's above the exponential moving average and the price went up. Now, in a little bit, we're going to be talking about how to add the profit maximizer. So you're going to take the AI data and you're going to be taking the trend following that's right here on front of your screen. And then we're going to be adding in the profit maximizer, just layer upon layer of how the AI stock trading system works, right? And I know this seems like a lot, but it'll all come together. And you're going to have to watch these lessons over and over to really grasp it. But that's why these foundations are important. If I told you how to use the system without telling you how to use the foundations, none of this would make sense. So, yeah, I'm really excited about this one. This is good. Once you figure out, hey, you know what? This is how great traders make millions in up and down markets. I'll see you in the next lesson. Okay, so what'd you think? That was pretty incredible, right? Now, if you liked that, that's only a taste, only a sample of what you're going to find in the full AI stock trading system. And I really highly encourage you to go and check this out. Obviously, you are interested in learning and how to trade, and that's why you're listening to this podcast. Now, I'm going to take and download my entire trading system that I use day in and day out onto you. And the only way I'm going to be able to do that is over at the AIStockTradingSystem.com. You're going to get phase 1, 2, and 3, several bonuses, and on top of that, I'm going to walk you through over a dozen trades that I put on inside of my account, holding your hand and showing you exactly how I got in, how I got out, how I use the artificial intelligence data, and how this could work inside of your own trading portfolio on a daily basis. So make sure you head on over to AIStockTradingSystem.com. That's AIStockTradingSystem.com to learn more and to get started and to download my decade plus worth of trading experience into your hands so you can start using the AI stock trading system today, the 5-step system to take the guesswork out of trading. Hey, if you like this video, let me know by leaving me a like below, and then subscribe and share it with somebody you think could use it as well. Be sure to comment below with your biggest takeaway from this episode and any suggestions you have for future episodes. And finally, make sure you watch these other videos to help you trade faster and trade smarter, and I'll see you on the next episode.